Hi, everyone. I keep getting this same question, and I think it's because we've had this huge run up in the S&P 500 where people want to abandon their diversified portfolio for just putting all their money in the S&P 500, right? So I want to just take you through the why you really need to think about it. I'm not saying that it's the wrong thing to do. What I am saying is you really need to put thought into it. Because while the S&P 500 might be at any given time the highest performing asset class of all the asset classes, and you could boil that down simply to stocks, bonds, cash, alternatives, or you could break down the stocks into large cap, mid cap, small cap, and so on and so forth. I want you to just see historically how the markets flow and how sometimes the top performing asset class changes to go to the bottom performing class the next year. And I just want you to be thinking about that as you put together your investment portfolios. So let me give you an example. What you see on the screen here is it's just an arbitrary number of years between 2013 all the way to 2021. And you'll see that with the 2013, I want you to just look at the five boxes there. I have small cap stocks, large cap stocks, cash, fixed income, and emerging market stocks. I want you to follow that from year to year. And so if you invested in 2013 and you said, "Oh wow, small cap stocks, that's the place to be." It was up 38% that year. And you took all of your money and you put it into small cap stocks. Well, ironically, in 2014, of those five asset classes, it was the third best performer of those five. And you can see it earned 4% or a little more than 4%. And if you had taken all your money out of large cap stocks, you would have missed out on more than double that rate of return because you can see in 2014 that it was up 13%. And so, what I like to do with investors is to ask you two questions. Number one, if the markets really pulled back in a big way, okay, how would you feel? There are some people who are going to say, I don't care. I don't worry about the ups and downs. I'm just going to keep plotting forward. Now, most of the time that's said when we're in an up market because people are feeling good. When that's usually not the case is when there's a down market. So if you looked all the way to 2022 on this graph, you'll see that small cap stocks were down 20%. So if you had all your money in small cap stocks and it went down 20%, how would that make you feel? Now, here's what I want you to follow. Check out this next slide. So first, look at the small cap stocks. If you can see, it's like a lightish aqua teal, and you can see it just go from year to year from 2013. Then it was number third spot in 2014. It went down a spot in 2015. If you gave up on it in 2016, you would have been wrong because it was at the top. And so this, if I just shade everything else and we look at it, check this out. So you can see that there is a lot of wisdom in having a balanced portfolio. You'll remember you've heard me say, never make a killing, never get killed. Always have exposure to as many asset classes that you can have. Why? It just serves as a good reminder that it's important to spread your money out because you can't foresee what the next big thing is going to be or the next major pullback is going to be. And remember, at the end of the day, what really helps you build wealth is not just investing, it's saving and getting the money in your investment portfolio to begin with.